All right, Doston, welcome back to Crypto Brain, and today we're going to break down Toshi in a proper structured professional way. Because what's happening on this chart right now might look simple on the surface, but once you actually understand the behavior behind the price action, you'll realize there's a much deeper shift taking place. And this is exactly where most retail traders get confused. So starting right here on the chart, you can clearly see that Toshi initially attempted to build a base which gave the impression that buyers were stepping in with confidence, and at this stage everything looked relatively stable and even slightly bullish. However, in professional trading, it's never just about what you see visually, it's about how consistently the market defends that structure. And this is exactly where things begin to change. Because although we did get reaction from this support zone, the follow-through lacked strength and we failed to maintain clean higher lows, which immediately tells us that demand is present but not in control. Now, as price continues to move forward, this is where structure becomes critical, because what we're seeing here is not continuation, but hesitation, and in strong bullish conditions, hesitation is minimal, whereas in weakening conditions, hesitation increases. And that is exactly the behavior Toshi is showing right now. Now, if you focus carefully on this region, you can identify what appears to be an order block, where price is reacting, but instead of aggressive continuation to the upside, we start to see slowing momentum and weak follow-through. And that is every clear sign that buyers are losing control. Now, this brings us to the most important part of the entire analysis, because once this level starts to break, what we're witnessing is not just a small pullback, but a shift in market structure and behavior, because instead of forming a higher low, which would confirm price moves lower and creates a new lower low. And this is a critical signal, because it confirms that sellers are now stepping in with dominance and the previous support is no longer acting as a strong defensive zone. Now, this is where smart money behaves very differently from retail, because they do not react emotionally. They wait for confirmation and position with precision, and if this broken level is not reclaimed with strength, then the probability clearly shifts towards further downside, or at least continuation of this corrective phase, before any meaningful recovery takes place. Now, another key detail that most traders ignore is not just the levels themselves, but how price reacts around them, because the speed of movement, the ejection wicks, and the follow-through all provide a deeper insight into market intent. And right now, those signals are showing weakness, rather hand strength. Now, transitioning towards the final part of this breakdown, let's take a quick look at the Toshi project itself, because combining technicals with fundamentals gives you a more complete picture. And as you can see on the website, the branding is clean, the layout is structured. An overall presentation suggests that the project is positioning itself seriously within the market, which is a positive sign. However, it's extremely important to understand that fundamentals and price action don't always align in the short term, which means even strong low oaking projects can still go through corrective phases. And that is exactly what we might be seeing here right now. So bringing everything together, what we're looking at is a market that initially showed signs of strength, but is now clearly displaying structural weakness. And unless key levels are reclaimed with strong confirmation, the smarter and more professional approach is patience rather than chasing the move, because in trading, precision always beats speed. And right now, this is a market where discipline will separate winners from trapped traders. And if Toshi manages to claim structure with strong momentum, then that becomes your confirmation for continuation. But if price continues to respect resistance and fails to break back above, then this move is very likely not finished yet. And that is exactly where most traders get caught on the wrong side of the market. But if you stay focused on structure and follow the behavior instead of emotions, so you put yourself in a position where you're reacting like smart money rather than reacting like the crowd. And before you leave, if you genuinely want to stay ahead of moves and understand the market like a professional, make sure you subscribe to Crypto Brain, because here we focus on real structure, real behavior, and real smart money concepts, not there. And if you found value in this breakdown, drop a like, share it with someone who needs to see this. and I'll see you in the next one.